This is Jeff Gorton from Gorton Financial Group with our June 2013 update. For the next few minutes, we'll discuss some of the factors that drove markets in June and the second quarter, as well as a few things that could affect the weeks and months ahead. Please be sure to review the disclosure statements following this video. Well, stocks closed the month of June in the red, but still managed to carve out significant gains for the quarter. In fact, 3 out of the last 4 quarters have ended in positive territory. For the second quarter, the Dow gained 2.27%, the S&P climbed 2.36%, and the Nasdaq rose 4.15%. And year-to-date, the Dow has surged more than 14%, while the S&P 500 and Nasdaq have increased nearly 13% each. All things considered, we're pleased with the market's performance so far in 2013. We saw a considerable amount of volatility in June as investors tried to make sense of the Fed chairman's statements about monetary policy. While there hasn't been an official announcement about the end of bond purchases, one Fed governor suggested that the September policy meeting might be when central bankers make a decision to start tapering them off, assuming the economy keeps gaining strength. Markets have been nervous about this news because many analysts believe the Fed's bond buying program has been behind this year's market gains. In our opinion, however, the economy can withstand a gradual and well-publicized reduction in bond purchases, and we strongly believe that the Fed will carefully monitor economic trends before making a move. Despite the jitters, there are many positive factors that deserve note. Consumer confidence climbed in June to the highest level since January 2008, which is a good indication that consumer spending will probably accelerate next quarter. Americans have benefited from rising property values and high stock prices. The job market appears to be steadily improving, and while we don't yet have data for the full month of June, weekly jobless claims show slow improvement, leading us to hope for a positive June result. And looking ahead, we don't want you to be surprised if we experience some volatility surrounding Fed policy announcements or economic report releases. We understand that it can be challenging to maintain focus on a long-term financial strategy when markets decline or experience volatility, but the underlying economic fundamentals show us that the basic ingredients exist for markets to keep advancing. Stocks are reasonably priced, inflation is low, interest rates are still low, and corporate balance sheets are healthy. While we can't predict the future, all of these factors point to a positive outlook for stocks in the medium term. As always, we'll be looking for opportunities to build strong positions for our clients amid the volatility. Once again, this is Jeff Gorton with Gorton Financial Group, signing off for the month of June 2013. I hope you found this commentary beneficial. If you have any questions about what you heard in this update, or if you'd just like to discuss your personal financial situation, please give us a call at 405-681-9633, and it would be our pleasure to speak with you. Well, the following is our required disclosure. While we believe this information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.